Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, September 19th, 2011 is sponsored by Realtic. All right, let's get right into the mix, guys. The markets, again, are having a sharp down day, but again, it's not a panic day. We opened lower, we inched down for the first 30 minutes of trading. You're looking at the SPY on an intraday basis. The SPY mirrors the intraday S&P 500 chart. Each candle here is 10 minutes long. So you can see really we opened lower, sharply lower. We went down for about 1, 2, 3 candles, which is 30 minutes, and then we started to find this area of support. You have two trend lines right here and the 200 moving average below. The markets then bounced back up, slowly floated down following the 20 moving average, and are now floating up following the 20 moving average. So again, one other thing to note here, look at the volume. The volume started out decently and has just vanished. And now, why would it be vanishing? Well, ultimately, this morning we had a little bit of panic on Europe again. It seems like every weekend when the markets are closed for 2 days, there's something that happens in Europe, and by the time the market opens on Monday, the markets are in a downward spiral. This happened last Monday as well. If I zoom out, you guys can clearly see this. This is last Monday. We opened lower, shot up, collapsed back down, and then by the end of the day, we reversed. I don't necessarily think we're going to reverse today, although we may float up a little bit more. But again, the key is to note that Mondays are notoriously down days. We're just seeing a lot of downside action because of what's going on in Europe right now and the 2 days close. If we zoom in on today's current action, the volume is disintegrating because everyone is now turning their head towards Ben Bernanke and the Federal Reserve. And the Federal Reserve, again, will release their FOMC policy statement on Wednesday. And everyone has been looking forward to this for months now. Why? Because at the Jackson Hole meeting, Bernanke gave a signal that there may be some QE3, quantitative easing 3, which again the markets are looking forward to. The markets want it. They've always wanted it. It pushes the dollar down, which in turn pushes the markets up, and that's what the markets are hoping for. So even though you have this little bit of selling today on the back of Europe, notice how the markets really aren't collapsing and the volume is just dying. Everyone is just sitting back. They're not selling. They're not necessarily buying. They're sitting back waiting for this announcement by Ben Bernanke. Right now the Dow is down 185 points, which is a decent fall, don't get me wrong. But remember, we were up 5 straight days last week, so 185-point fall on the Dow is nothing to freak out about. It's not like we're back to the lows of from early August or anything like that at this point. Nasdaq is down about 24 points, which is not even 1%, and the S&P 500 is down about 18 points, 1.5%. So really, Dow S&P down 1.5, Nasdaq is down just under 1%. Again, you can see here the spiders are slowly grinding higher. You'll have a little intraday resistance right here at a double top. See this little pivot high? If we get up there, there'll be a little bit of resistance. Plus, you have the 50 moving average curling down. So my guess is right in this vicinity, if we get up there, that'll be where markets hit a little resistance. If you get through that level, then you could easily head back towards Friday's low pivots right in this area. And again, this would be your next level. So I'm giving you the intraday levels to watch. And remember, folks, there's a free trial. There's a 7-day free trial to the Research Center and to the Intraday Stock Chat. You can take one, either one, or both at the same time. Come check us out. And again, we give live swing trade alerts out there, trades that I'm personally taking as a chief market strategist, making money in this market. We profited last week. We're going to profit again this week. I don't care which direction the markets go. We're going to be on the right side of the trade using the technical proprietary signals that we play with, that we've made up, that we've come up with and mastered. All right, so again, it's a free trial. Come check us out. And again, we believe you'll be with us for life because you'll just start making money for once. And again, in any type of market, I don't care if the market's going down or up, we will be seeing the technicals that point to that and then utilizing trading to make money off of that. And swing trading, longer term, a couple day hold to a week or two hold, and making money that way. All right, in any case, these are your levels on the intraday. If you want the nightly levels on the daily chart, you need to join the Research Center as I do that in the nightly video. This is more just to give you a taste and feel for what we do here at InTheMoneyStocks.com. Now, again, just take a look here. This is your first resistance, which will be the 119.90 to 120 level. If you get through that, then what you're going to look for is the 50 moving average, and then ultimately this pivot here at 120.38 to 120.40 area right here in this yellow line sloping straight across, or just going straight across the chart. If we head back down, you watch for this area again. This is going to be the big area right here. You have the 200 moving average creeping up. It's now right in this area, and these two trend lines. If you get through that, then you look for a little bit of a double bottom support down here. I personally don't think the market's going to get down to the lows again. I just don't see it. The volume is too light at this point. There's too much positive thinking in terms of quantitative easing number 3, Ben Bernanke on Wednesday. And now Wednesday, after we get this announcement, if it's bad and not what the market wanted, yeah, we could collapse, absolutely. But that's Wednesday. Right now we're dealing with Monday and then Tuesday. And again, my guess is we go sideways to slowly up into Wednesday, and then Wednesday's a wild card day. I'll be analyzing that. We'll be watching it. We're going to see exactly what happens. I'll position myself accordingly to make money, whichever way the technicals are telling me it's going to go. Okay? All right, what else do we have here? Let's take a look at the dollar chart. Dollar obviously is higher on the day. Makes sense, right? And again, interesting to see the dollar dropping now, but it's still positive. This is where the dollar closed on Friday, and you can clearly see that the dollar's having a pretty strong day, but it is pulling back now. And again, that's exactly why the markets are moving up. Right? Remember, the markets always move inverse. I repeat, they move inverse to the dollar. So if the dollar's falling, markets are inching up. If the dollar is going up, markets are inching down. And you can clearly see that the markets have inched up over the last 30, 40 minutes. And look at the dollar. It's come back in very nicely. All right, so that's that chart right now. We're keeping an eye on here. Let me just scan through and see what else we have going on. Gold was an interesting signal today, folks. And I thought this was very fascinating because gold opened higher and collapsed. And this is the GLD chart, which is the intraday chart on the gold ETF. And this chart collapsed and has continued to collapse, starting to get a little bit of a move up. Why would gold be getting a little bit of a move up here? Because obviously we're seeing the dollar fall, which gives all commodities a little bit of a minor boost. But the bottom line is, again, folks, that I thought this was fascinating to see gold down when the markets were in panic mode. And what that told me right away this morning was that the markets would not be in panic mode for the rest of the day. They would go sideways or float up, and that's why gold was down. Now, if gold was soaring and the markets were down, I would say we'd probably be selling to the lows, if not going lower today, maybe having a down 3, 4, 500 point day. That's not the case. And again, utilize the GLD to confirm any sort of move in the markets. It will give you a good basis to go off of. All right, it is a leading indicator in many ways, and it does show fear. It's a great fear index. All right, now, obviously, people aren't that fearful. Why aren't people that fearful? Because they think Bernanke's going to come save the day. That's simple, really. All right, let's take a look at a couple other things. How's the USO doing, which is the oil ETF? The USO is down 89 cents. But notice again, oil is getting a small bid here. Why? Because the dollar is falling. As I mentioned just a minute ago, when the dollar falls, commodities get generally a small bid. All right? And again, we can take a look at the daily chart of the USO. And the daily chart of the USO is very bearish now. In terms of this, take a look at this, folks. Look at this trend line. You've now broken it. It looks like you'll close below. I just don't see it getting all the way back to recapture this trend line. Therefore, that's a breakdown on the oil chart. I think it'll go sideways to up for a couple days, and then I think it's going to collapse down and probably go to this double bottom level down here. And again, I probably would be short-term bearish after a pause or bounce day for the next couple days going into Wednesday, Thursday on this chart. All right, classic little triangular pattern here. We're not big believers in triangles because it's really just bearable flag patterns that are playing out. But as you can see, break down below this trend line here. And now it's in no man's land with only a little bit of support right here in the short term, and then continuing down to there, and then ultimately double bottom. Okay? Let me see what else we want to take a look at here, folks. Let's go back to the spiders and just keep a close eye on what that's doing. Spiders, again, nice little bounce on the daily chart. This is the daily chart of the SPY, which again mirrors the daily chart of the S&P 500. And you can see right here the 50 moving average, the 20 moving average got tagged, and look at the nice bounce off of this. The markets continue to float up here beautifully. If we go back to the intraday chart, you're slowly getting close to this double top here, which again will be short-term resistance, and then ultimately the 50 moving average and the next yellow line above that will be your key levels. But again, it's a nice down day, down up 185 or so on the Dow Jones Industrial Average, but by no means is it a big drop. Is it a panic drop? There's just no volume in the market right now whatsoever, and we are continuing to float up here. And again, I haven't shorted this market yet, although I do look to short it in the not-too-distant future. I will give out these live trade shorts, and these are swing trades, meaning you hold it for multiple days for a good big gain, and I'll give them out live to the research center, live to the chat room, and so forth in the coming days, all right? So again, you want to join the Take the Free Trial, 7-day free trial, research center chat room. Come to InTheMoneyStocks.com. Start profiting with the pros. We teach the same proprietary techniques that we give to the hedge funds, and the calls that we give to the hedge funds, we give to our subscribers, our loyal subscribers, which again, majority of them, once they join us, are with us for years and years and years, and they continue to be with us even to today. So again, join us here at InTheMoneyStocks.com and start profiting with the pros. Take care, guys.